Okay, so now we discuss about our first question in our week 1 assignment, which is number E16, creation of new subsidiary. So as you can see that in the question that it is a newly created subsidiary, means it is the internal expansion of Leicester Company to create a newly created subsidiary, namely Mambi Corporation, in exchange of 40,000 shares of its $3 par value stock. And then you are given the items of the assets, cash, accounts receivable, inventory, land, building, equipment, with cost and the book value. As we can see that the differences between the cost and the book value is on the accounts receivable and then buildings, equipment, right? So when we see about the building and equipment, like what we discussed last week, it is because of the accumulated depreciation. Okay, so for the buildings, it is 160 minus 125. So you will get 35,000 for the buildings accumulated depreciation. For the equipment, it is 240,000 minus 180, which will be 60,000 for the accumulated depreciation of equipment. And then for accounts receivable, right, the cost is 75,000, the book value is only 68,000. So if you still remember from accounting 1, or maybe when you learn in intermediate accounting, so accounts receivable can be decreased by the provision for doubtful debts. Okay, it is 7,000 from 75,000 minus 68,000. Okay, so we are required to do the journal entries for Leicester and for Mambi. Okay, for Leicester, remember for internal expansion, we transfer out all of our assets. Okay, so debit investment in Mambi Corporation common stock 498,000. It is the sum of the book value. Okay, the sum of the book value. And then what is on credit is the accumulated depreciation and the provision for doubtful debts. So we need to debit it to make it 0. Okay, for the assets, remember to use the cost. Okay, so we transfer out all of our asset. For B, okay, when Mambi wants to record the receipt of the asset and the issuance of the common stock, so we record all of the asset received by Mambi along with the accumulated depreciation and provision for doubtful debt. Okay, so the common stock, remember it is 40,000 times $3 par value. So we get 120,000. And then we have the additional paid-in capital, which is from 498 minus 120,000. So we get 378,000.